Welcome back to the Universal Financial Group's business channel. If this is your first time here, please feel free to view any other videos we have that might help you in your retirement planning. My name is Mark Pincus. I am the managing partner at the Universal Financial Group. Today, I would like to discuss with you how you can increase your retirement income by 25 to 40%. We do this without adding any risk to your portfolio. In fact, your accounts only get credited when the markets go up, and you do not lose any value if the markets go down. Please listen to what I just said again. If the stock market goes up, your accounts grow. And if the markets go down, you do not lose anything. Best of all, your account grows tax deferred, and also you have access to your money on a tax-free basis. To summarize, tax deferred growth, tax-free withdrawals, and no market risk. Sounds too good to be true? But let's discuss each component separately. First, how important is tax-deferred growth, and what exactly is a tax-deferred growth vehicle? The IRS taxes our income. We have city, county, or state taxes, tolls and transportation taxes, estate taxes, rental car and hotel taxes. Basically, we are being taxed from every direction. And we do not think that taxes will be going down anytime soon, especially with our deficits and the way our government is spending our money. But in our opinion, because of the health of our Social Security system, the government gives us an incentive to save for retirement and not to rely solely on Social Security. And that incentive is that they will not tax us on the growth of our accounts until we withdraw the money. It's a great benefit. The taxes are deferred until we withdraw the money at retirement. Our program goes an extra step by having tax deferral as well as being able to withdraw the money tax-free. I will discuss those benefits later, but tax deferral is an important and necessary piece of the puzzle in any savings plan. Let me explain the benefits. If you invest $1 and get a 100% return for 20 years, in other words, if you start with $1 and the next year you have $2 and then $4 and so on, for 20 years, if you did this and you did not have to pay tax each year on the growth, you would end up with over $1 million. If your tax bracket is, say, 10%, that means that each year you would have to pay 10% of the growth to the IRS. You would end up with not $1 million, but just over $375,000. And if you were in the 35% tax bracket, you would end up just with $22,000. The difference is called the taxation effect. The government and its collection agency, the IRS, is giving us a gift of tax deferral. Some examples of some tax deferred accounts would be a 401k offered by an employer, or an IRA, an individual retirement account, or just a simple annuity. All have tax deferral, but they all have tax penalties and early withdrawal penalties prior to the age of 59 and a half if you decide to take the money out. Then at some point after 59 and a half, if you wanted to take the money out, at that point in time you would be taxed at your ordinary income tax bracket in between 25 to 40% or more. Our program offers tax deferral and those great benefits, and also provides access to your capital tax-free, both prior to the age of 59 and a half and after, without a tax penalty. Tax-deferred growth and tax-free withdrawals. If you do not have to pay taxes on these withdrawals, like you do in your 401k, SEP, IRA, or annuity, then you will be saving 25 to 40% via the taxes, thus increasing retirement income by that amount. Benjamin Franklin said, "There is nothing certain except death and taxes." Our program offers tax deferral and tax-free withdrawals, and one more benefit that I did not mention. The account value will go to your family income tax-free if you prematurely die. That summarizes the tax deferral discussion. I also mentioned we do this with our program without having any additional market risk. Our accounts are tied to the S&P 500 or stock market. If the market goes up, your account grows without a tax liability. If it goes down, your account will not lose any value. Call me at 972-386-6639 to discuss our advanced retirement funding vehicle. You will get the tax deferral, tax-free withdrawals, while participating in the market gains, if any, without any risk. In other words, if the market goes down, you don't lose. Call me at 972-386-6639 and I will go over our plan in great detail. Or visit our website at www.universalfg.com. That's Universal, F like Financial, G like Group. Thank you for watching our videos, and if you like them, please subscribe. About 1 to 2 times per month, we will add to our video library with some other creative investment money-making ideas. Thank you again, and my name is Mark Pincus.